Hello everyone, welcome to this particular video, and in this video I want to explain to you how you could actually profit from using strength meters. That's strength meters. And in the previous video I explained to you, in the past I explained to you how you could actually use a free web app to as a strength meter for knowing the trend of the market before actually plunging into the market and placing a trade. But that was actually a web app, in the sense that you have to go through a website if you want to actually check out our tutorial, because trust me, you're gonna enjoy it and you're gonna like it. Just check the description below. Just click the description button below, and you will see the video on that, on Finviz trend meter, the Finviz web app software. But today we will be looking basically at an indicator that you can actually add to your MT4 on your PC. Yes, which is the MT4 extension. So you can actually add the indicator to your PC, and it makes your trading seamless and stressless. So if you're new to this channel, I indulge you, or I beg you to subscribe, and also click the bell button. And also you can share this video with your friends if after staying to the end and you find this helpful and informative. So now the indicator itself is known as the CM strength indicator. The CM strength indicator, that is it shows you the strength of the market. So you wouldn't just be trading based on your own idea. Now we all know very well that it's necessary that you trade with the trend. The trend of the market is highly essential, very important, and for this reason it's needful that you know the trend before you actually place a trade. And one of the things that and that's the reason why I usually take out time to do a weekly update on what happens on the synthetic market, the volatility 75, the boom and crash market. I also take out time to do a weekly update on also Bitcoin and Ethereum. Why this is so is because you can actually know what to expect for the week on those markets. So if you're new here, or if you're part of us and you've actually not been following those updates, I advise that you actually check them out on a weekly basis, which is on Sundays for the volatility 75 and boom and crash update, then on Mondays for the Bitcoin and Ethereum updates, then on Tuesday and Fridays we give tips on how you can actually be successful while trading. So it's a big community for you to actually learn from, and you're gonna be a good trader being part of this community. So if you're new here, ensure that you subscribe. Now back to our indicator. Like I said, the name is the CM, so it has two indicators. It has two basic indicators, and to download it, all you need to do is just to go to the description below, and you will see the link to the download folder. The download folder contains so many softwares, so many indicators that can be useful for you. But for the sake of this tutorial, all you need to do is just to look for this particular name, the CM strength indicator, and just download it from the list of the indicators you'll be seeing in the folder that you'll be getting. So now the indicator is very easy to use, and that's what I'll just be doing. I'll just be showing you briefly how to use the indicator. Alright, so let me delete this now. So now the first you need to do is, once you've added the indicator to your page, once you've added the indicator to your page, once you've added the indicator to your MT4, then what you need to do is to drag it and drop on your chart. Just click OK, then drag the second one and click OK. Now there are two indicators, the M and the basic CM strength and the CM strength TF. That's the time frame. Now I'm going to show the difference. Let me just quickly separate them. The difference between them is one is fixed and one can be changed, in the sense that one, let me separate this quickly since they are overlapping. Okay, so this one I basically use. Okay, let me change okay, anchor, let's change this to on the X axis, let's change this to 3, or rather let's change this to 2. Let's change this to 2 and click OK. Alright, so that's this. Now the thing is, this is it. Now this gives you the first one, which is the CM, which is this gives you an overall outlook of what happens in the market. That generally it's an all-time indicator. That is, it shows you the trend of the market on the all-time level. It shows you the trend of the market on an all-time level. Why this, which is the TF, which is the one I usually use, and which is that we're going to advise you to focus on. This allows you, or gives you the luxury of changing the time frame, so that you could actually see the trend of the market with respect to the time frame that you want to trade with or work with. And as you usually know, it's advisable, it's best that you know the trend on the higher time frame and go to a lower time frame to actually place your trade. So now quickly, I'm going to be removing this because I for one don't usually use it, but you can actually leave it if you want to. That's this. Click delete, then I leave that. So let me quickly edit the location of this. I can make, you can change the x-axis, you can change it to maybe 200 and click OK. Then you see it right here. Now you can see that the time frame here is 30, which is 30 minutes. The rule of thumb is this: if you want to, it's always good to use the ratio of 1 to 4 or 1 to 6, between 4 to 6. Now what do I mean by 4 to 6? What I mean is this: if you're trading on a higher time, a lower time frame, let's assume that you're trading on a 15 minutes time frame, it's advisable that the higher time frame that you choose for your trend following is either times 4 to times 6 of the 15 minutes time frame. What I mean is this: if you are trading on 15 minutes time frame, 15 minutes times 4 gives you 1 hour, isn't it? Yes. So that means it's best you know the trend on the 1 hour chart before you actually go to your 15 minutes chart and trade according to the trend that's on your 4 hour chart, on your 1 hour chart. Now if you're trading on a 1 hour chart, which is on a 1 hour chart, you place your entry. That is best that you know the trend on at least the 4 hour chart, preferably the 4 hour chart, so that you can actually go to your 1 hour chart and trade in accordance to the trend on your 4 hour chart. So that's what I mean by trading with ratio 1 to 4 or 6 or to 6. So now quickly take for instance, so now working with this indicator is where you're going to apply that. You don't need to go often to be checking your time frame, your higher time frame. Now let's assume that I'm working with 15 minutes to 1 hour time frame. It's very simple and straightforward. What I need to do is this. What I need to do is just to set my indicator here, my strength indicator here, to 1 hour, and setting this to 1 hour, whatever it gives me, whatever I get here, I just go straight to my 15 minutes time frame and I trade over with it. So now quickly, let me set this indicator. Just click edit, then I set this indicator. I see the time frame, I see TF1. So I'll change this time frame to 60 minutes. Now everything, the time frame here is in minutes. So if it's 30 minutes, you just put 30. If it's 1 hour, you put 60. If it's 4 hours, you put 240 minutes. If it's 1 day, you put 1440 minutes. So that's how it actually works. Then you click OK. So you can see it is changed and it's now 1 hour. You can see it has changed now. So I'm actually doing this tutorial over the weekend, so you won't see movement on this, you won't see movement here because it's weekend and the markets are actually closed. So now, just like I explained to you in the previous tutorial on how to use trend meters, that's in the Finviz tutorial. Like I said, if you want to get a full understanding of how to use trend meters, just go to the description section below and just check out the Finviz tutorial on Finviz, how to use trend meters to help you know the trend of the market before actually trading. So I might not be going over the whole basics now, so if you want the basics, just go over to the video and check. So now what you see here is, you see the US. You can see here that we have the first year is USD and the last year is Australian dollar. That's the odd. So I'm going to be pairing them together, which is the odd USD. So let me go look for my odd USD right here. Okay, this is my odd USD. So I just come here and place and put it here. So then I change this to 15 minutes. Remember that we are trading on the 15 minutes. Yes, we are trading on 15 minutes. So right here, let me add my, alright, so that's it. So so now you can see we have the USD, we have the odd. So that's the odd USD. So that means this trade is on a downtrend. That's what it means. It means it's on a downtrend because the odd is, the odd here has a larger ratio of -7.9 and this is 7.7. So pairing these two together, I know the odd is bigger than the USD right here, or rather the USD is bigger. So we might be having some consolidations, notwithstanding, but you know, since they are close, since these two currencies are close, I might not want, using them might not be preferable. So let me check out JPY and odd. Let me check out JPY and odd. JPY odd. I think there should be a lot of disparities there, difference. Okay, odd JPY. So I'll put my odd JPY here. Let me see what it gives me. Alright, okay, this is a good trend. You can see odd JPY is a strong downtrend, as this tells us already. You can see we have -7.4, then we have 4.0 here. You know, this is a strong uptrend, this is a strong downtrend. Putting them together might give you, and these are close currencies, so putting them together might give you some disparities. So but putting JPY and odd there's a lot of difference. You can see that we have $76-77, so shows that they are wide apart, the currencies. So, and we have 4.0 here, we have 7.9 here, man. So definitely it's definitely a downtrend. So you already know that you're looking at a downtrend. So what you will be expecting is just to go to your 15 minutes time frame, since you've already filtered your currency meter to 1 hour. So just go ahead and look for strictly down trends. That's downtrend possibilities. Yes, that's all you need. So in this kind of scenario, you can see that the market ended here. When my stochastic was already overbought. Don't forget, you're looking for downtrend. So whenever it goes overbought, that is when you want to place your entry, because this is known as a pullback. So whenever it pulls back, then you place your entry. Now in this kind of scenario, you can see that the market is overbought already. So don't forget, the basic strategy is, this is my 50 exponential. Let me add another indicator. Let me add my moving average 200 exponential. Let me change this to white and make it alright. So you can see that we are in a downtrend already. We've been in a downtrend for days now. This is day 1, day 2, day 3. You see, so that's why it's good to use this trend meter. So you just might not even need to use this at all. So now you can see this. Now right from here, you can see all you need to, do not look for buy signals, strictly sell signals. So in this scenario, you're looking for just sell signals. So when you can see it went overbought here, then you can see the market started dropping. You can see there was even right here, you could even see a divergence here. You can see a divergence here. So this is a regular divergence. Yes, if you want to understand divergence also, just check the description below. You'll see the video that explains divergence in full. Yes, so that you can understand the two types of divergence, the hidden and regular divergence. This is a bearish classic or regular divergence, which shows that there's a change in the trend. The trend was upwards, which is a small pullback, then the trend continued downwards. So you can see the grade 4 here. So go ahead and use this strategy and you're going to make a lot of money. If the market was actually on, I would have actually taken this trade, because this, you can see this here, this is still going to go down as far as here, and it's still going to drop more. So that's that on how you can actually use this software and how you can be profitable with it. So don't forget that you could actually get the software. The link to it, how to download it, is in the description below. And for other tutorials like the Finviz current meter and also the divergence strategy, how to understand it and use them properly, not the wrong way, you can get all that from the description below. You'll see the link to those videos below. So if you're new to this channel, I implore you to subscribe and also follow up our updates on Monday, on Sunday, on Tuesday, and on Fridays. So I remain your boy, Leke Kayode, and I'll see you in the next video.